Hey there, Michael Blank here, apartment investor. Really glad you're here. I get asked a lot about, my gosh, what about the market? Aren't we heading into a recession? What is your market outlook? What should we do? Is now the right time to invest? Okay, so here's my answer to that. So let's look at various factors. Let's look at the demand for multifamily. The demand for multifamily rentals is never been stronger or higher than before. And here's why. Number one is the millennials don't have the down payment to pay for houses. And even if they do, they prefer not to buy because they saw what their parents went through in the recession and they like their freedom. But the other one is affordability as well. So, for example, the average mortgage in the United States is about $1,700. Last year, 2018, the interest rate went up by 1%, which widened that gap and increased it to $1,700 by $170 a month. That's a pretty big jump. Renting, on the other end, is much lower than that. So that's why there's a gap between home ownership, and it hasn't been this low since the 60s. It's really incredible. Now, the other thing also is they're not making any more Class B and Class C housing, the kind of housing that we invest in, because it costs way more to build new stuff. $120,000 a unit. So if that's what it costs, you're not building a C class or B class building. You're buying an A class. So because of that, it's very hard to build a Class A luxury affordable apartment building. So the demand for affordable multifamily is strong and has been for many years and will continue to be. So the demand is very, very strong. Now, what about interest rates? Okay, oh my gosh, interest rates, they can only go up. Well, that's true. They're historically low, but they've been historical low for a long time. Let's look at last year. Last year, the Fed increased the interest rate 4 times, quarter point each, for a total of 1 point. And we did see some hiccups last year, and people were like, oh my gosh, should I be buying? And it was amazing. And then they forecast an interest rate of 2 in 2019. And then in December 2018, they kind of backed off saying, oh, whoa, we're not going to do that right now. All right, so we're not projecting any kind of interest rate hikes in 2019, possibly even beyond. But here's what happened when it went up by 1%. Hardly anything happened. The cap rate stayed exactly the same. Prices were still high. And so what that leads me to believe is that buyers still want multifamily. It's the most attractive asset class of its type. And investors, by keeping the cap rates and the prices where they were, are saying, I'll put up with a lower return. I want to get into multifamily. There's a lot of 1031 exchange money chasing deals right now. There's a lot of people with money who understand that they don't want to put in the stock market. They're chasing multifamily deal. And then there's a lot of international money, and all they care about is certainty, stability, not even a return. So there's a lot of cash chasing the best asset class in history because of its low risk profile, its low default rate, cash flow, and stability. There's nothing better. So even if interest rates were to go up, I don't think prices are going to do much at all. So while we're always projecting higher cap rates in the future when we're analyzing deals, in the next 1 or 2 years, we don't see much happening in that regard. Now, what if there is a recession? Oh my gosh, aren't we overdue for recession? Well, maybe, though a lot of economists say that the last 9 years or so has been the weakest boom of all time. It actually hasn't been a boom at all. So it's arguable whether we're due for a recession or not. But let's say, for example, that we are. Okay, and we're very aware of this, and we understand the chatter, though no one can really agree on the fundamentals of why that would happen. But let's say it does. What are we doing about it? What should you do about it? Well, what we're doing about it is we're just being really, really conservative with our underwriting and how we buy. There's a lot of people who are not. They're compromising their underwriting. They're paying a little bit more than they should, and we're not doing that. So number one is we want cash flow from day one. That's really important. Cash flow from day one. Okay, I'm not banking on appreciation. I want cash flow right now, and I want to put on long-term debt. So if there is a recession, 2, 3, whatever, 5 years from now, and I don't have a 3-year, 4-year, 5-year note on it, I can just ride it out. I have cash flow. I have a long-term note. Hey, so maybe I can't return the investor's money in 5 years because there's a recession going on, but that's okay. We can hold on for another 1 or 2 years and ride it out. Now, we're also assuming higher interest rates and lower prices at resale. When we underwrite this deal, we're not assuming that the cap rates are going to be where are they right now in 5 years. So we're buying right. We're also making sure we have plenty of reserves when we close. Okay, reserves when we close, and also we're taking reserves out during cash flow for emergencies and capital improvements. So these are just common sense things. If you're investing with an operator, make sure that they're doing these things. So we are very cognizant of a potential correction, but the way I see it is we're going to be just fine with our existing multifamily. What it will do for all of us, though, is it'll create more opportunity for us to buy. When there's a market correction, we're going to be able to pick up stuff cheap or undervalued. We know exactly what the value of multifamily real estate is, and we know when it's cheap, and we'll be positioned to buy more of it at below value. So that's my outlook right now. I would say cautious. Cautious is probably a good word, and careful, but about stable for the next 12 to 24 months. So that's my market outlook for multifamily. And before you head out, make sure you grab my free ebook right here and check out this next video. Catch you in the next video.